25 to 30% a year. Okay? And the center of these three circles is where we want to be. The center of these three circles is where we want to be. The center of these three circles results in more time and money to do the things you want to do in life. And the key takeaway, the main thing I want you to take away from today's webinar is that you need to make sure to use the right tool for the job. So what do I mean by tool? It's either the software or website you use to find and manage your trades. It could be your broker's tools or website, or it could be other software that you purchase. Today, I'm going to be showing you how to use technical indicators to be successful. And as I show you, I'll show you the tool that I use. And at the end, if you want to try the tool out, I'll show you how you can do so. In the meantime, I'm going to be giving you information and techniques you can begin to use immediately. So here's what we're going to cover today. Number one, how to use top technical indicators. And what I mean by this is you'll understand what they are and how to use them to pinpoint entries and exits. This will help increase your trading accuracy so you get more winning trades. Next, we'll talk about when to search for trading candidates. In other words, there is an ideal time to be placing these trades. This will help you improve the results you get each year. Third, we'll talk about how to search for candidates. You'll learn how to narrow down your list, any list, from thousands maybe to just a few. And this obviously will help reduce the time you spend trading. And then finally, I'll show you how to take the techniques you'll learn today and just set up automated systems to send you alerts when a trade needs to be made and exactly what trade needs to be made. Just some quick notes here. I like to keep this webinar a little interactive. We get so much more out of it when we interact together. I do have Ray Clark. Ray is in the background. He'll be answering any questions that you have. Okay. Feel free to ask. I have a lot of content to cover. What I'm going to do is I'm going to save time at the end to answer the more common questions. So you won't really see me answering a lot of questions as we go. But if you have one, please type it in the chat box. You guys have been good so far using that chat box, and Ray will be there answering any questions that you have. Okay. So what we're going to talk about first is how to use top technical indicators to pinpoint entries and exits. And earlier I told you one of the things we'd focus on today is improving your accuracy. Well, you're going to learn how to use these indicators to pinpoint entries and exits. This will increase your trading accuracy so you get more winning trades. A lot of people struggle finding trades because they just don't know what to look for. It's like back when we were in school, remember? I remember using the card catalog, the Dewey Decimal System. Remember to find a book? Well, if you didn't know where to look, it'd be nearly impossible to find what you were looking for, right? Instead of not knowing what to look for, you want to look at a stock and just have the pattern really stand out to you very clearly. I know a guy who collects Legos. He's a Lego collector. And he's able to look at what seems to you and I to be a pile of just junk, right? A pile of Lego pieces. He can look at that pile and immediately be able to pick out the pieces that were worth money. He knew which pieces belonged to certain sets. He knew which sets were worth more money than others. And he was able to really quickly pick out the pieces that were more valuable. It was all because he knew exactly what he was looking for. Okay? And over time, you're going to be the same way when looking at graphs. Okay? Let me show you how to do it. One of the most popular technical indicators, perhaps, is MACD. Stands for Moving Average Convergence Divergence. It's a great indicator to help pinpoint meaningful changes in a stock's price direction. It is a trend-based indicator because it's based on a 12 and a 26-day exponential moving average. Now, it's not important to get caught up in the calculation or the formula. You can Google it if you want. What's important is to discuss how to use it. So let's take a look at an example. Here we see a graph of NRG. I've added MACD to the bottom of the chart, and the most common use is to look for times when the MACD histogram, that's these yellow bars, cross above or below the zero line. This is a great indication that there is a change in the stock's trend. And you can see several examples here on this chart. Just go through any chart after chart. Just ask yourself, when you have a MACD bullish crossover, did you have a chance to make money? And what I would suggest, the biggest takeaway, guys, that I would want you to take away from using the MACD is apply it to a trending stock. Okay, if bullish uptrend, if you're going to be bearish, apply it to a downtrend. Because I can guarantee you, if you apply the MACD, which is a moving average based indicator, to a non-trending stock, right, a stock that's kind of moving sideways, it will fail you. You won't be successful using the indicator. So apply the MACD to a trending stock. Okay, so let's take a look. What about here? Did you have a chance to make money? Absolutely. You had a bullish crossover. Stock continued to move higher. We're just going to look at all the bullish MACD crossovers here, moving from left to right. How about here? Yes, right? New high, higher low, just coming off of a higher low. Did we have a chance to make money? Was that a meaningful change in trend? Absolutely. What about here? Okay, new high, pullback, stock stopped going down, started to go back up, another higher low, nice uptrend. Bullish MACD crossover. Notice how we didn't get sucked into this little move here, this 2-day strong rally, because the MACD histogram did not go positive on that day or on those days. It did here, and that gave us a good opportunity for gains. What about here? Okay, barely a new high, but a new high. Pullback, higher swing low once again. MACD turns positive. Did we have a chance to make money? Absolutely. What about here? Now, why didn't we get in here? Okay, why didn't we get in here? Because the histogram bars did not go positive then. Okay, it did here. Now, I'll talk about how we probably walked away even, maybe a small little loss. I'll talk about the negative crossovers, okay? What about here? All right. So let's go to the negative crossovers. So we entered here. Got a bearish crossover here. Would that have been a good opportunity to protect profits? Absolutely. Now, I know what you're saying. You're saying, well, the stock fell for 3 days, sure, but then it gapped up, but I missed out on all that move. You did, but that's hindsight. You didn't know that that was going to happen, and I'll explain why in a moment. You shouldn't think that way, looking back. And we're doing a back test, by the way, right? We're back testing an indicator manually, but it's a back test. We're looking at bullish crossovers. Question I get a lot is, okay, well, what about now? What do I do now, right? How do I use the indicator now? You use the indicator now exactly how you tested it in the past. Bullish MACD crossover, you buy. Bearish MACD crossover, you sell. What about here? Definitely, right? A good opportunity to take our gains off the table. Nice strong move there. Pull back off of a new high. Histogram bar goes negative. Stays negative for quite a while there. Couple of months, right? So we stay out. We stay out. Remember where we re-entered, right in this area here, right? Bullish MACD crossover. Yeah, we squeezed out a couple of points there, it looks like. What about here? You can't get much better than that. Remember where our entry was. Our entry was right in this area here off of the bullish MACD crossover. Couple of days off of the new high, pull back, we exit. Now we stay out for a little while there, but we winded up getting back in right in this area here, and this is where I said you probably would have walked away even, maybe a small little loss. But remember back here, right? Remember back here where we exited and only to see the stock gap up, and we said to ourselves, I missed out on all those gains. Okay? If you take that with you and you don't exit a trade when the MACD histogram bar goes negative because of something that happened to you in the past that you're taking with you, what happens? You don't exit because you think the stock is going to keep going up, and then you turn a small little loser into a much bigger loser, and then what do you wind up saying to yourself? What do you wind up saying to yourself? What do I do now? Right? The question that we get asked a lot. Right? So here is an indicator that's very systematic, very easy to understand and use. You apply it to a trending stock. You buy when the histogram bars go positive. You sell when they go negative. And more times than not, it's going to result in more winning trades than losing trades. And here we had a negative crossover. You could see it was dead money at that point. You take those profits, you redeploy it into a different stock. Okay? Another very popular trading technique is to use support and resistance. One of the great things about the VectorVest tool is it has a way to automatically draw support and resistance lines for you. Let's take a look at what I'm talking about. Now, before we get too deep, what is support and resistance? All right, support is a level where stock prices have stopped going down and they begin to go back up. Typically, it happens on multiple occasions. It's where demand is deemed strong enough to support the stock from falling any further. Resistance is a point where the stock's price has stopped going up and begins to come back down, again, typically multiple times. And it's where supply is deemed strong enough to resist the price from rising any further. And it's the ultimate crowd mentality indicator. So think about it in terms of this. You ever buy a stock, you watched it go up, right? You watched it go up, but you didn't sell it. Why didn't you sell it? Because you thought it was going to continue to go up. Then what happens? Comes crashing down. Well, what do you say to yourself? If you weathered the storm and held on to the position, you say, well, man, I had such a good gain in the position and I gave it all back. If it ever gets back up there again, I'll sell it. Then what happens? It finally gets back up to that level again, and all the people along with you who bought it back here the first time that didn't sell it the first time, you sell it. What does that do? That puts tremendous downward pressure on the stock's price and it begins to fall. So how do you use support and resistance in your trading? Number one, let's talk about the buying opportunities. There are two buying opportunities. Buying opportunity number one is when price retraces from support. Price retraces from support. Not just hits support, but retraces from support. And the other buying opportunity is when price breaks out through resistance. Remember, we already said that there was built-in selling pressure around that resistance level based on the crowd mentality. Well, if a stock is able to overcome that selling pressure and bust through that resistance level, that's very bullish. That would indicate a buying opportunity, particularly on higher volume if it breaks out through resistance. Okay. Second, you can also use support and resistance to indicate when to sell an existing position, an existing long position, or to initiate a short position. Okay. Number one, bearish situation number one is if you see price retracing from resistance. Remember, the area where selling pressure overcomes buying pressure, and if you see that happen and price retraces from resistance, you sell your long position and or take on the short position. And additionally, if you see price breaking down through support and moving lower, that's also bearish. We don't see that on the chart here, but price breaking through that floor is an indication to, again, sell a long position or to initiate a short position. All right, another indicator, my favorite indicator, by the way, is the stochastics oscillator. As with other oscillators, it helps pinpoint overbought and oversold price situations. Now, don't worry about all the squiggly lines. We're using just the industry standard settings of 14.3. It's a slow stochastics. So let's take a look at a closer example. And I'm only going to talk here, guys, about the oversold situations, the buying opportunities. On the lower end, by the way, it oscillates between 0 and 100. On the lower end is the level of 20. At the upper end, where the overbought situation, is the level of 80. And again, I'm only going to talk about the oversold situations or the buying opportunities. Would you agree that when stochastics was below 20, that the stock was somewhere near a bottom or somewhere near a low point, somewhere near a good buying opportunity? Absolutely, right? Now this is an uptrending stock, okay? And you can apply stochastics to an uptrending stock. Now you may not think, remember, it identifies an oversold situation. You may look at this little pullback here, and you may look at just price and say that's not oversold, but stochastics is telling us it is. This pullback here, you look at that and say it's not oversold, or this one. But that's what indicators are for. They're to help us make better sense of price action. Okay? So let's first, I'm going to be clear here. Just because stochastics goes below 20 doesn't mean that you buy. You wait for the stochastics oscillator to go from below 20 to above 20. There's your trigger. That's what's telling you to buy. The setup, or what's telling you to get ready to enter the trade, is when the stochastics goes below 20. You're kind of getting ready. You're following price. And you wait for the crossover from below 20 to above 20. That's a great buying opportunity. How about here? Again, question that we're asking ourselves when we look at these technical indicators, did we have a chance to make money? How about here? Now you can use it, again, you can use stochastics on an uptrending stock. That's fine. New high, pullback, higher low, stock rebounds, stochastics goes from below 20 to above 20, you buy. Didn't give us another buying opportunity until here. 2 days off of the new low, new higher low. Did we have a chance there to make money? Absolutely. What about here? Okay. Now I'm going to kind of go through, guys, how you can combine some of the things that we've learned so far. Here on, again, don't worry about the date. It's just trying to teach you techniques here. February 13, 2018, we had a stochastics crossover. Now this is a pullback severe enough that we would consider it oversold, right? Stochastics goes from below 20 to above 20. Maybe about 3 days off of the actual low. Good buying opportunity, good opportunity for some gains. So what I like to do is if I'm buying off of a higher swing low, when stochastics crosses above 20, I'm going to look to the most recent swing high as my initial target. Okay? Stock reaches that level and then retraces from it. Doesn't break out through it. Doesn't break out through it. So as the stock pulls back off of the most recent swing high, what is being established here? A level of resistance, right? What did we say about what to do with a long position when price retraces from resistance? We said that's a good indication to sell the long position. So you're out. You're out of the trade. Stock pulls back. Another situation where stochastics goes from below 20 to above 20. And we buy. What else are we seeing here? We are seeing not only stochastics going from below 20 to above 20. Good job, Jeffrey. We see support. We see a stock retrace from roughly the same level than it did back here. So we have a support retracement, and we have stochastics going from below 20 to above 20. All right. We're in the stock 1 day, and then what happens? Crash. Big red candle there, and we're thinking, great. Great. Now, though, you're not saying to yourself, what do I do now? You're saying, okay, I have a level of support here. I just bought it off of the retracement. So if the stock falls and continues to fall and breaks down through support, that's when I'm going to get out. Not just because it goes down 1 day and I panic. Okay? But the stock doesn't break down through support. It retraces from it, and we're thinking, great, good. All right, I'm in the clear. Right? I used a reasonable stop loss here at support. Stock didn't break down through it. But now it starts to pull back again and retests that support level once again. And you're thinking, uh-oh, all right. I'm probably even. Maybe I got a small little loss. This trade didn't go the way I thought it would. I still have support here that's going to protect me from a catastrophic loss. What happens? Stock falls, stops again. Look at that lower wick, right at the same level there, right in that zone. Okay? That's a hammer, by the way, as well. That's a bullish candlestick reversal pattern, which is nice to see at support. Then the stock retraces, and then it really begins to move up. Never comes back down to retest support. Remember that resistance level that we said was established back here. All right, well, I'm looking at that resistance level, and I'm saying, all right, look, I hope it breaks out through it, but if it doesn't, if it retraces from it, I'm out. And it does. It does reach the resistance and retraces from it, I'm out. Always giving us, guys, another opportunity to get back in. Why am I getting in here? Stochastics goes from below 20 to above 20. Okay? Stochastics going from below 20 to above 20. I still have resistance here. It didn't go away. Looking at 3 touches here. So I'm in the trade a couple weeks, and I'm going to be straight up with you guys. You see this big red candle? That is a resistance retracement. That is my exit. And I don't care what the stock did afterwards. I'm not going to sit here and sugarcoat and say, yeah, I would have held through that, because I wouldn't have. If I see resistance, the retracement off of resistance for the 4th time, I am out of the trade, but that's a winning trade. Okay? Then what happens? All right, the stock rallies, breaks out through resistance. When resistance is broken to the upside, that resistance level becomes support. Okay? That resistance level becomes support. A couple of days later, I got a retest. Retest of support. Retracement off of support. Another retest of support. Okay? So if you happen to enter back in off of this support retracement, you were worried there for a little bit, and you were prepared to exit if support was broken to the downside, but it never was. It retraced from it again, along with stochastics going from below 20 to above 20. Okay? Now there are going to be times where stochastics goes from below 20 to above 20 off of a higher low, and then the stock breaks down immediately, falls below the swing low, and you get out of the trade. Always prepare to get back in. Okay? Here's another example of a support retracement with stochastics going from below 20 to above 20. 1 retracement, 2 retracements, 3 retracements off of that support level. We're in the trade 2 days, and it crashes for 2 days, but it stops at support again. And then retraces from it, gives us a nice opportunity there. All right, another technique I want to teach you guys is a little system that I put together called, we called it Jerry's Gems. I'll explain how to get access to this in a little bit. Okay? The indicators that we're looking at here are the 50-day moving average and a 150-day moving average. So an intermediate term moving average and a little bit of a longer term moving average. We're looking at stochastics. We're also looking at earnings per share. Earnings per share here, I included in this setup because I wanted to add a layer of fundamental valuation to this trading technique. Okay, looking at favorable earnings, bottom left to upper right. March 15th of 2019 was an entry, and it was an entry because the stock was uptrending, okay? The 50-day moving average was above the 150-day moving average, and both moving averages, as you can see, are creating separation. You guys can see that separation, right? The jaws opening up. Gil says, close the Jerry's Gem trade today for $554 gain. Awesome, Gil. Awesome. So the entry was on March 25th of 2019 because the stock price pulled back to the 50-day moving average, stayed above it, essentially kissed it, okay? And the stochastics oscillator went from below 20 to above 20. There's our trade there. There's our entry. There's our trigger. Okay? Again, stock is uptrending, 50 above the 150. Separation being created by the two. That's really important. Earnings per share is favorable, bottom left to upper right. Stochastics, as the stock is pulling back towards the 50-day moving average, stochastics goes below 20, stock stays above the 50, retraces from the 50, and stochastics goes from below 20 to above 20. There's our entry. Nice little regression trade. Here's another one, Meta Financial Cash. Stock is uptrending, 50 above the 150. Nice separation here being created by the two. Great earnings per share performance, bottom left to upper right. Stock pulls back off of a new high, kisses the 50-day moving average, stays above it, retraces off of the 50. Again, nice separation between the two moving averages. Stochastics going from below 20 to above 20. There's our regression entry. Nice retracement off of that 50-day moving average. Here's another one, FII. Stock is uptrending. We're starting to see nice separation between the two moving averages here. No way would I have bought the stock back here. Right? Even though the 50 is above the 150, even though stochastics goes above, we're not seeing separation between the two moving averages. As the stock rises and a new uptrend emerges, we start to see that separation. Nice kiss of the 50-day. Nice doji there. Nice kiss of the 50-day. Stochastics goes from below 20 to above 20. There's our entry. And the last one, CCOI. Stock is uptrending. Separation being created by the two moving averages. Stock kisses the 50-day. I'm not buying it here. I'm not buying it here. Why? Because stochastics doesn't go below 20. Okay? Could have bought it over here in this area. I actually didn't even see that. Uptrending, nice separation being created by the two moving averages. But there's our entry. Remember, my promise at the beginning, one of the things I promised you is that technical indicators can be used to help improve your accuracy. In other words, it can help you increase your winning percentage to get more winning trades than losing trades. Next, you need to know when to search for these trades. It's not enough just to know what the indicators are. We want to put the probability of success in your favor. To do that, you need to know the best time to trade. This is going to help improve your results each year. It's going to help you reduce your drawdown. It's going to increase your percentage of winning trades. And I've talked to a lot of traders over the years, and many of them don't know when to enter a trade. They say they get confused because they're getting so many mixed signals. They have no confidence in their signals and no confidence that the trend will continue. Instead, you want clear signals telling you that it's time to enter. This is just going to give you confidence that the market will continue to go up. And why is that important? Because markets go up, they go down, right? They go up, they go down. We found best results are when you only buy during up markets and stop buying during down markets. While some people use moving averages on the S&P, let me show you what we found very effective. I've just zoomed in here a little bit, and I don't have time to get into all the details of how it's calculated. The software takes care of all that. Basically, we found it better to look at roughly 8,000 stocks instead of just the Dow 30 or the S&P 500. One of our best signals uses technical indicators, just like what we talked about today, to signal changes in trend. We call it our DEW timing system. The DEW represents the technical indicators used, such as the detrended price oscillator, a 30-day weighted moving average, and upper and lower envelopes. All you need to know is when the signal changes, it puts a green arrow on the chart. Okay? Green arrow means you buy. Red arrow means you stop buying. Okay? No, Marco, this is not pre-recorded. It's an older chart, but it doesn't really matter. So just to let you know, you got it. And time frames, guys, of charts don't really matter in a webinar like this. Let's focus on the techniques, how to use it, because it doesn't matter if I'm looking back in 2014 or now. The techniques are the same. Okay, just to kind of let you know, I want you to get discouraged because I'm looking at a chart from a few years ago. So using signals like the DEW can help you increase your results each year. Look, we want you to buy rising stocks in rising markets. We want you to keep your trading and investing in tune with what the market's doing, and the DEW is a fantastic timing signal for traders. The reason why I say that is because the DEW signal tends to change from down to up, for example, before the confirm calls. Okay, so it'll get you into the market a little sooner, and if you are a trader, that's really what you want, right? You want to kind of get in earlier in the trend as opposed to waiting a little bit too longer and missing a lot of the run. Next, you need to know how to search for trades. You know when the best time to trade is, DEW up signals, markets rising. You know how to use those indicators and those techniques that I just taught you. This is being recorded. You want to go back to view the recording, you can, to kind of shore up what I'm going through here. But you know how to use the indicators. You know when to use them. Now it's okay. How do I find these trades? You need to be able to narrow down your list from thousands to just a few and not spend hours upon hours doing it. And when you're able to do this, it's going to help reduce the time you spend trading every day. And another side benefit, if you do it like I'm about to show you, it's going to improve your results. The problem is, even when you know what technical indicators are and how to use them, it's still up to you to find which stocks to actually trade. You can go through hundreds and hundreds of charts, right? It's just so time consuming. But with the right scan, you'll have trading candidates right at your fingertips. So let me show you how we do it. There are three main ways to find trades. There's doing it one by one. This means you look at one graph after another after another. This is where you could be going through hundreds of charts in a day trying to find these patterns. Then there's using a search to help narrow down the field of candidates. Then there's getting automatic alerts. Okay, meeting certain criteria, like a MACD crossover, for example, or a stock whose price is retracing from support. So the one-by-one method is, let's say you're looking at the S&P 500 stock list, right, the watch list within VectorVest, and you want to find stocks whose MACD has just crossed bullish today. Not a week ago, not 2 weeks ago, not 3 days ago, today. So what you would do is you'd go through all the charts. You'd put the MACD on, and you'd go through and say, okay, Micron, did the MACD just cross bullish today? No. Okay, I move on to the next one. Lam Research, did the MACD just cross bullish today? No. DR Horton, Applied Materials. You go through all the stocks, all the charts, and you may go through 500 to find a handful. It's quite possible. Okay? And you can do it. This is where the time comes in, right? The time requirement. VectorVest has a search tool called ProTrader. Plugs right into the main software. I know most of you likely don't have this tool now. If you don't, just keep an eye on what I'm doing here so you can see what it does. And later I'll show you how you can try it if you want. Within the real-time program, we have a tool called ProTrader. You can scan for stochastics crossovers. You can scan for MACD crossovers. You can scan for stocks retracing from support or retracing from resistance or breaking support or breaking resistance. Donald says ProTrader is wonderful. Donald has ProTrader. It is wonderful. It's my favorite tool, along with RoboTrader. Two of my favorite tools in the VectorVest program. All right, so we have these pre-built searches. So if you're bullish on the market, you run a bullish stochastics crossover search, for example. All right, so let me take you on a little. Let me do a little case study here. All right. Again, just a kind of little example. We're going back to the end of 2018 because a lot was going on at the end of 2018. The VectorVest composite just confirmed a one white soldier reversal signal. That's a bullish candlestick reversal pattern. It's called a one white soldier. And on December 28th, that happened. Not only that, the stochastics oscillator on the VectorVest composite crossed from below 20 to above 20. The MTI also was below 0.60 at this point. The buy to sell ratio was below 0.20. Got a nice rally after Christmas. Primary wave turned up. Okay, so all of these things, you're observing these things, you're looking at the market, you're saying, this might be a good time to go bottom fishing. Okay. A good time to start thinking about taking gains is right around this level here, beginning of January. Why? Because the market, we have resistance here. Remember, it was support, right? It was support here, it was support here, it was support here, and then it broke down through support, which becomes resistance. So the market now, we're traders, remember, we're traders, right? The market settled into that resistance zone for a few days. So we might be thinking, oh boy, okay, I got nice gains here, nice move off of the bottom. I got my stochastics crossing above 20. I'm going to think about maybe taking my gains off the table if the market retraces from resistance, but it doesn't. It breaks out through resistance. So another good time to start thinking about taking profits would have been all the way up here in February. So here, okay, on December 28th, 2018, 2028, this is what the stochastics crossing above 20 search would have looked like on that day. Okay? Remember, market just blasted off of the bottom. Our buy to sell ratio was below 0.20. MTI was below 0.60. Stochastics just crossed above 20. Bullish one white soldier pattern was confirmed. So we go into the Unisearch tool and we go to the ProTrader folder and we run stochastics crossing above 20, and here are the stocks. In just a couple of months, okay, the basket of stocks, the top 10 stocks are up 17.3% with 10 winners and no losers. And you're looking at the market and you're thinking, well, of course, the market skyrocketed. Well, it did. The S&P 500 went up 12%. So did we outperform the market? We absolutely did. We crushed the performance of the market, okay, by about 45%. Right? 5% from 12% is about 45%. Okay? Two of our biggest winners, MOH, up 23%. Let's take a look. There's our entry. And I know this happens a lot. You enter off of a support retracement, and stochastics crosses above 20, and then the stock crashes for a couple of days. You're thinking, oh man, I was wrong. I gotta get out. But you have this floor to protect you. Remember what we learned earlier about support. There's a support level. Did the stock's price break down through that support level? It did not. It allowed us, that money management, right, that trade management allowed us to stay in until price reached the next resistance level and it kind of retraced from it. I wouldn't have blamed you if you take your gains off the table at that point. Here's EWBC. Now this is different. We entered and it just took off. Right, there's our entry, 1228. This is another one of our biggest winners. Resistance, end of January. Couple of dojis, couple of indecision days, right at resistance. So we're thinking, I got a great gain here in a couple weeks. I'm going to exit if price retraces from resistance, but it doesn't. It breaks out through resistance. What does that level become now? It becomes support. It breaks out through resistance, and then we get a retest. We get a retest of support. And you're thinking, well, I was greedy, right? I was greedy. I hung on. Price retraced from, broke out through resistance, but now it's coming back right to the same level that it did before. Well, that's support now. If it breaks down through support, you exit. It doesn't break out through support. It continues to run and settles in for about a week into the next resistance level. I wouldn't blame you to take your gain off the table at that point. Okay, and while we don't have time to look at all of them today, we also have support and resistance searches to look for all the four trading techniques that we discussed earlier. Okay? Then finally, the other method to find trades is by using automatic alerts. You can set up the Genius within the real-time program to have the system automatically send you an email or a text message when a MACD crosses bullish, or stochastics crosses above 20. And then we have another tool called the Watchdog. It scans the database for you. Now, in the Unisearch tool with ProTrader, you do have to be there and click a few buttons to run the search. With the Watchdog, which is also part of the real-time program, you do not. All you do is you set it up. I have some set up all the time. MACD bullish crossover on the S&P 500. I got an alert at 10 o'clock in the morning on June 17th, for example. There was the alert. There was the MACD crossover. That actually happened during the day, right at 10 o'clock. Here's another one, FANG. Same day. Okay, MACD histogram bar is negative. Turn positive. Good opportunity for some gains. Now, how much time, this is a rhetorical question, but how much time would this save you? What kind of impact would it make for you if you were able to be one of the first people, one of the first traders reacting to signals as opposed to being last and always second guessing yourself? And my promise at the beginning, one of the things I promised you is that technical indicators can be used to help improve your results while also reducing the amount of time you spend. In other words, using tools like ProTrader and the Watchdog and the Genius can help you drastically reduce the time you spend looking for trades, and it will improve your results each year. At the very beginning, I said the main thing I wanted you to take away from today is that you need to make sure to use the right techniques along with the right tool for the job. So here's a checklist of what we feel every tool should have. Your tool should have technical indicators and display them on charts easily. They're very visually appealing. You don't have to kind of struggle understanding what they're telling you. It should provide searches that find these technical setups. It should provide you with market signals that have consistently worked. It should provide you with pre-built or customized automated trading systems. And finally, an alerting system which notifies you of potential trades. So earlier I said that I'm going to show you some of the tools, okay, that I use, and if you don't have them, I'm going to show you a way that you can get them. So let me show you what you'll get here with the VectorVest real-time program. You get real-time ticking data. You get ProTrader searches, which are those technical searches. You get the Watchdog, which is a real-time alerting system. Sends you either an email or a text message, however you set it up. Provides you with the auto timer. This is an automated market timing portfolio manager. Now the total value of all this is $2,780. Now, for you only, for being on this webinar, we're offering all of this to you for $1,195 for a year. And I think Ray, yep, thank you, Ray. Ray has typed in this address in the chat box, www.vectorvest.com/tradebetter. I want you to go to that site. Okay? Now don't forget too, with the real-time program, there is an exchange fee for either the US or the Canadian markets, whichever you choose, and you can see the rates there for the exchange fee. Now, forget about that $11.95. If you order before the end of today's webinar, and I'm going to stick around for a few more minutes to answer some questions, I'm going to knock an extra $100 off. Okay? So for $1,095 for an annual subscription for the year, you get everything that I talked about today, including this special bonus. I don't know when it was, maybe in April of last year, myself and Dr. David Paul. Some of you are familiar now with Dr. David Paul. He's helped us a ton in the US market. He's our managing director of VectorVest UK. He and I taught a course together. It's called Swing Trading Success with VectorVest. We are going to give you this course. It's an on-demand course. We're going to give you this course as part of your annual subscription to the real-time program. Okay? Some of you might already be on an annual subscription to the real-time program. I know, I think it was Donald, right? I think Donald is. You can renew your annual subscription, folks, at this special rate and get this special bonus. If you, let's say, you know what, Larry says, does this offer include the iPhone app? Yes, it does. Yes, it does. You may say, I'm just going to I'm not ready now. I'll let my subscription renew automatically. You can do that. Number one, it will renew at the higher rate. Number two, you will not get this special bonus if you do that. So this is kind of just a not so often, offered special here with this course for those of you that have an annual. If you don't have the real-time program, let's say you have the end-of-day version, you're paying, I don't know, $700+ or the intraday version, $800+. You can upgrade those, okay? You can upgrade those subscriptions to the real-time program. That will effectively cancel your old end-of-day and intraday subscriptions. You'll get a credit, you'll get a refund of your remaining balance, and you'll effectively start a new subscription, a real-time subscription now. Nick says, is this new? Is what new, Nick? This swing trading course? I think we did it in April of last year, so not that new. Okay. Michael's asking, do you have these techniques combined with an automated trading system in the trading system viewer? No. No, a lot of the techniques, guys, that I taught you today, they're cherry-picking techniques. So it's not it's not something that you can necessarily automate with a blanket stop criteria, things like that. So it's not an automated trading system, but the Watchdog is automated in that it'll send you alerts of which stocks to buy. Dr. David Paul says this perfectly. When you're trading like this, right? When you're using technical indicators when you're trading, whether it's support and resistance or stochastics, he puts it this way. He says your stop criteria needs to be where your stop criteria needs to be. And that goes for each individual stock. Okay? So it's not an automated system where you can just set it and forget it. It's more of a manual. I'm trading. There are price points on charts that I have to be aware of to help me manage the trade. Jeffrey says, I took the course. This one, the swing trading with VectorVest, he said, is well worth it. Well worth the cost. Thank you, Jeffrey. Okay, Ruben says, my subscription does not end until about September, and I have Options Pro and everything else. What now? Go to that website, Ruben, VectorVest.com/tradebetter. The administrative end will take care of itself. Your subscription will start over from now. Wait, I'm sorry, Ruben. You have VectorVest real time, right? And you want to renew. Go to that website, VectorVest.com/tradebetter. Your current subscription will effectively cancel. You'll be given a refund, a credit of the remaining balance, and a new subscription at this special rate will begin today, if that makes sense. Tangi, the elite rate is what you see actually. The elite rate is the $10.95, so there is no more more of a discount for an elite subscriber. This webinar rate is the elite rate. David asked, good question. Will the renewal remain at $10.95? Depends. Depends on if a year from now or 11 months from now you join me for another one of these webinars. If you do, you will be able to renew your subscription at the $10.95 rate. If you don't, it's going to renew at the higher rate of $12.95. Okay? And just like you were made aware of today's webinar, you will be made aware of all of our, you guys get flooded with emails, I know, right, of all of our webinars, so you'll know when the next time I do this webinar 11 months from now. All right. Andrea says, can I get both U.S. and Canada real time together? Currently have both end of day. You can, Andrea, but it's quite a premium. You're gonna pay for both. So if you're interested, call our support department for exact pricing on that. But you can. It is possible. It's not the $10.95 rate for both. All right. So just give our support department a call. Ruben says, does that include the Genius and Auto Trader? Yes, it does. This offer, guys, includes the Genius, includes the Auto Trader, the Auto Timer, the Watchdog, and the Pro Trader tool. Yeah, David, you can rewatch this. This is being recorded. I'm going to send out the recording within about an hour from now. Yep, Doug, this is being recorded. You will not lose Options Pro, Ruben. No. You're welcome, David. Sure. Kay says, sorry to be repetitive. Please summarize all the programs this cover. Okay, I think I just did. So real-time data, tick-by-tick streaming real-time data. Pro Trader, which is the technical analysis scanning tool, scans for MACD crossovers, support and resistance, moving average crossovers, stochastics, ADX, RSI. Comes with the Watchdog, which is an real-time intraday automatic alerting system. Comes with the Auto Timer, which includes market timing signals in both the back test and a real-time portfolio. And this special bonus of the course, the Swing Trading with VectorVest that Dr. David Paul and I did. All right. Yep. Okay. So previous slide with the pricing, $10.95, $1,095. That's an annual subscription if you order before the end of today's webinar. And I'll give you guys a little tip. We're going to extend this for a little while longer after I shut down shop here today. All right. So it's not technically right as I close down. We'll leave this $10.95 available just for a little while longer. All right, so go to that website, www.vectorvest.com/tradebetter. So $10.95 plus $96 for the U.S. exchange fee. Or, sorry to burst your bubble, Andrea, for Canada, it's $372 a year for the Canadian real-time exchange fee. And we're not making any money, guys, on that. That's what they charge us for real-time ticking data. Okay. David says, you said $10.95 is the elite price. Yes, if you're an elite subscriber, it's $10.95 always, David. Right? So if those people, those clients that are on this webinar today that's not elite, just by being here, they are getting the elite rate. But you will always, if you're an elite subscriber, always get the elite rate. Okay. Any questions on anything, guys? Call our support department. Okay? Call our support department. A lot of these tools you may need walkthroughs. Okay? How do I use the Watchdog? How do I set up a portfolio in the Genius? What's this Pro Trader all about? Give our support department a call. They'll walk you through it. Okay? Imdad says, I just started a trial period. Would I be able to get this pricing by the end of my trial if I decide to continue with VectorVest? Imdad, you have to sign up now. You have to sign up now for the annual subscription. So if you can't, by the way, this $11.95 offer is only good until Tuesday at 10 a.m. Okay. All right, let's see. You're welcome, David. Absolutely. Rajinder says, does it include extension subscription fee? I don't know what that is. By the way, yeah, and you're kind of in a gray area there. I'm not sure if you signed up for the annual that your trial will continue all the way to the end. I would give our support department a call and ask. All right. Good. I'm glad you are. Okay, Regina says, already have the annual subscription that is nearing expiring. So what's going to happen is you're going to get a credit, a refund of the remaining balance, and then you'll start a new annual subscription today, getting billed $10.95, and that'll be effective as of today, going out 1 year. Oh yeah, so the Jerry's Gem scan. Remember that Jerry's Gem search or technique I taught you? That's part of the swing. I can't believe I waited this long to say that. That's part of the swing trading success course. You will get that search automatically inputted into your programs. Okay, it's a folder within Unisearch with that one Jerry's Gem search in it. So that searching, that scan, right? That technique is searchable, and it's part of that swing trading success course. Yes, there is a watchdog video as well, Ruben. Absolutely. All right, guys. Well, look, our number is 888-658-7638. Our number is on the website. Within the VectorVest tool, there are videos for everything. There are videos for the watchdog. There are videos for the genius. There are videos for Pro Trader. So all of those videos are within the VectorVest software, not necessarily on our website, but they're all videos within the tool. Okay. Once again, if you have any questions, pick up the phone, give our support department a call, and they'll help you out. So I want you guys to have a great day. It's Friday. No, it's Thursday. It's Thursday. Yeah. Have a great weekend, though. All right. And we'll see everybody soon. So don't forget. Edwin says, if I call, will I get the same price? No. No, what I would suggest is to go to VectorVest.com/tradebetter, then call. Fill out the order form, and then give our support department a call. They can look at your order, refer back to it, and then kind of walk you through whatever you need. Okay? Have a great evening, everybody. We'll see everybody again soon. Take care, folks.